Hey, it's Zachary at the Trade House, here to help you start trading efficiently. It is November 10th, 2017. As always, our standard risk disclaimer, and you can find us on social media at the DFW Trade House. Be certain to get plugged into our community, and we're going to take a look at the economic calendar to begin the weekly outlook. Now, we can see that there is some Euro news happening over the weekend. We're going to have the president of the European Central Bank speaking, and this is going to be an influencer depending on what is released. Fast forward into when the market opens right at 5 p.m. Eastern. We are going to have a speech followed by a FOMC member speaking later on in Asian session. Now, looking at Monday, we do have the Bank of Japan governor speaking in the afternoon, and then looking towards Tuesday, we do have some British pound news in the early morning, followed by this US dollar index news. Wednesday, we have the average earnings on the British pound, and this looks to be like there is a high potential for quite a lot of volatility on the US dollar as well as Australian dollar related pairs. Keep in mind, with this unemployment rate news, this is going to be a big influencer that is likely going to be priced in. However, we could still expect anywhere from 30 to 50 or even higher amount of pips. Now, Thursday, we do have some more British pound news, another speech, and then to end things off on Friday, the Euro Central Bank president speaking once more, and then some Canadian US dollar news in the morning. So it does look like there's a lot of speeches happening this week, and the interesting thing about that is when it comes to the markets and really just understanding how these leaders essentially of the economic playground and what they say, it does have an influence, because anything that is stated in a press release or even through some form of on demand live speech, it's going to be subjective. Traders are going to have to take that data. They're going to have to really just analyze it in their own way, see what it is that they take from that, and at the end of the day, it's going to influence their decisions in some kind of way. Coming over onto the charts here, we are looking at the dollar index on the daily. And we're going to do things a little bit differently for this outlook. We're going to consider the last 3 years of data, including the 2017 year, so 2014, 15, 16, and this year, of course. And we're going to start by just cleaning up a little bit. Now, we were looking for price to hit our area up here around the 95.5 zone. We had a lot of confluence with our moving average, and we do see that there still is more of a bullish intent, even though we are getting some minor pullbacks to end off the week. And what we're going to do, we're going to add on a Fibonacci from the low of 2014, take it up to the high. We can see that we are hitting that 38.2. Let's go ahead and add on some relevant areas of demand and supply. So right in where we are right now, this, in my opinion, would be a very key demand zone. Looking at the upper levels, we still do have all of that area that we were talking about. However, we're going to consider this gap that's going on over here. If you can't see it, I will make an oval to make it very clear. And although it's behind a rectangle, you can notice that right in there. And now looking at this and looking at the weekly, we can see that we are trading above our 200 exponential moving average. And with how this week closed, really quickly, I want to show you the Euro USD chart. And you can see we have this large bearish candle followed by what happened here last week, and then the bullish candle to end this one. Coming back to the dollar index, looks very, very similar, doesn't it? We have this large bullish candle followed by this. We did have a little bit more bullish movement, however, to end this week, followed by the bearish move back down to the zone. So very, very similar, something just to kind of pay attention to and make note of. But in the grand scheme of things, the dollar index still does seem to have some bullish potential heading towards the end of the year, really. And why I say this, if we look back over here, 2014 on the weekly, we can see that right around October, November, December, we did have a lot of bullish action. 2015, October, November, we did get some bullish movement towards the beginning of December, and then December we did just kind of consolidate, but overall the end of the year, the fourth quarter, was more bullish for the dollar. 2016, we can see again, October, we start the month off very, very strong. Heading into the beginning of November, we get this pullback, followed by Trump getting elected. We have the very bullish week, pushing up to new highs for what we can see on the chart right now anyways, and then starting off the year with some bearish action right up until now. So it would make sense from a technical analyst standpoint to see the pattern or something like it repeat. You know, end of the year, bullish action, bullish action, bullish action. And really, if we do see anything lower, I would expect it to not go beyond the 93.5 level. So just right in here where all of this is happening, I can put a little rectangle, but I would not expect price to go any lower than here. I am still bullish on the dollar looking towards the end of the year. And if we were to just speculate on what could potentially happen, I could see price dipping a little bit lower and then making a natural climb up towards the higher levels to start off the 2018 year. Now obviously it may not follow the price line exactly, it could do many things, but that's my outlook for the dollar. It's a great place to start looking at the futures market because it gives us another confirmation for when we're looking at currencies. Now the US dollar Japanese yen, this is something that I have only recently started trading again. However, it has been something that I've been trading for my entire trading career up until now. And right at this moment, it is in a very interesting place. To start, I can notice that there is this gap over here. So let's just go ahead and make a area demand. And we can see that we are trading slightly above it here on the daily. With how things have been trading in the 2017 year, we've really just been consolidating. You know, I would say that we still are in an uptrend. However, that is simply just looking in comparison to what we're talking about when it comes to the dollar index. You know, the dollar does lead this pair. And really, I would be looking for buys if we do see price come down towards this lower area of demand, simply because we would get this additional confirmation of the 200 EMA being very close to this whole zone. And really, if we're looking at things, this is the 112.25 level. up to the 112.75, let's say. So we have about a 50 pip area where, depending on how price reacts coming into this zone, it could set us up for a push up to the higher levels on the chart. Now we're going to add a Fibonacci. Let's take it from here. We can see that we are trading below the 61.8. You know, one other way we could draw it is taking it right from the high, drawing it down to there. Now what we will do is we'll remove all of the other levels except for the 61.8. So we can get an idea of where those two 61.8 levels lie, and really they're both in confluence with a lot of supply. That is really easy to see. Now with the US dollar Japanese yen, you know, again, I wouldn't personally enter it at this particular moment, but I am looking for more upside movement to finish the year. You know, a long-term target, we could say realistically we could even see it hit as high as 117. So we'll go ahead, we'll make a price level just to call it an end of the year target. And of course, this is going to be something that we'll be keeping track of as the weeks progress. So US dollar Japanese yen, you know, 117, that is my 2017 target. And looking from where price is right now, you know, that still is about 370 pips to the upside. So a lot of potential for this move to happen. A lot of potential for price to trade lower. You know, we do have this other demand gap down in here. Just to put some emphasis on it, I will draw the oval. And we're going to go ahead now and look at the Euro USD. Now the Euro USD, we did look at something there on the weekly with the dollar index. And something to notice for all the traders who like to trade the head and shoulders pattern, what I'm going to do real quickly, we do have a little supply gap over there. And when I say a supply gap, basically what happened is there was so much interest in selling, and keep in mind this was right at the beginning of the year as well, where we gapped down and then just immediately it continued the momentum. You know, the gap occurred because there was too many people who were looking to sell at this price, and there was nobody interested in buying right in here. So we gapped lower and then just continued down. Now the opposite applies for the areas of demand. You know, right in here there were too many people interested in buying, nobody was willing to sell at this price. We gapped up. You know, of course we did get a little bit of correction, but then we never truly filled that gap. We just continued up basically from the end of April right until right now, looking towards almost the end of the year. So when I was mentioning the head and shoulders pattern, we will just quickly draw this out. You know, we have the left shoulder, the head, the right shoulder, and we do see that this right shoulder, it broke down. We're coming back up, we're retesting, and we could see price naturally just continue down. It would put us in confluence with our 200 EMA. I would be curious to see if this whole area lines up and if it looks like it could be some sort of relevant area of demand. And these are very small zones in the grand scheme of things. I mean, we're talking anywhere from 30 to 50 pips. Looking at the chart, I mean, we can see just exactly how price action has played when it comes up to this level. You know, starting off 2015, we had a lot of consolidation, and then we had a very strong movement away from it. Coming into August here, we spiked up beyond it. Notice how we came up and then we immediately, within the next few days, were trading below it again, tapped it once, tapped it twice, went lower than we had for the entire 2016 year. And then, of course, right now, it did require a lot of bullish momentum to actually get us trading back above that level. So we could see something like this where price just slowly moves down towards the whole 114.5 level. And if we do see price go any higher, I mean, it would make sense for it to come right up to this whole 1.2 area again. And the last time that we traded in there was actually in September. Now notice something right here as well. If I go ahead and just remove these trend lines to make it a little bit easier to see, we can notice that right in here there is a little gap. This was the September 11th candlestick, and really, you know, seeing how the head and shoulders formed, the tip of the head was right at that September 11th anniversary. So keep in mind, you know, how things work. From a technical standpoint, we're simply just analyzing data from the past, we're back testing, we're figuring out what could happen, and just checking in on the weekly here once more. You know, we are trading below our 200 exponential moving average, so we will see if price continues down. And I mean, again, with how the Euro USD has been playing, we can notice that in October, November, December 2016, a lot of bearish movement. Same thing, 2015, October, November, December, we did get some bullish movement, but you know, the majority of this move was bearish. And then 2014, you know, October, November, December, we did get that gap and just a lot of bearish momentum coming in for the Euro USD towards the end of the year. So I mean, that is something to consider, that for the last 3 years it's been pretty consistent. Perhaps it's time that the cycle changes and we do see that switch where it comes back up. You know, if price were to switch it up, we could potentially see something like this, where price, gotta put my trend line on, where price trades up. And then to start off the year in 2018, we would really have to see, but it would not surprise me to see us trade back down a little bit. And then, I mean, at that point, if we do trade towards the end of the year, back towards this 1.2 level, I believe at that point it would be time to start seeing price rise higher, because essentially it would be as if the cycle is shifting. You know, the last 3 years, coming back to the dollar index really quick, we can see that that pattern has been fairly consistent. You know, end of the year, bullish. End of the year, bullish. End of the year, bullish. And right now, we're just kind of consolidating. We're kind of chilling around. It's not too clear as for if this was the low or if we're going to see price come back down and make its way towards the 61.8. So we are going to be watching this. We're going to have to reevaluate as we get more data available to us. But right now, just a quick recap, the dollar index, I am looking for more bullish movement. US dollar, Japanese yen, looking for more bullish movement. And the Euro USD, you know, removing the trend lines that we just drew and coming back to that bearish outlook for this pair, given the head and shoulders pattern that did print. Now, let's talk about the US dollar Canadian, shall we? On this currency pair, I am bullish. Now, I do see potential for this to come a little bit lower down to this trend line that we have drawn. And this is something where, realistically speaking, we could be looking anywhere from the 125.8 to the 126.200 level for some buys. And I know that I'm speaking a little bit quickly, but you can always pause this, you can always rewind it. You can, essentially use this as a training of sorts if you're not yet subscribed to our social channels where we release consistent updates and different special trainings, essentially. Now, with this area that we've just identified, it is similar to the bias that we were talking about, where we could see price come down, hit all of this area, and then continue trading higher towards the end of the year to follow the cycle. And it would make sense simply because look at all of the trading activity that's occurred up at these higher levels, the 1.3 major quarter, all the way up to the 1.325, let's say. So right in here, if we wanted to make this really, really precise, all of the trading activity that's occurred in here, let's look at the historical side of things. December, October, November, bullish. October, November, December, bullish. We did get that high of the last 20 years to start off the 2016 year. And then again, October, bullish. November, during the middle of the month towards basically right until the middle of December, we did get some bearish movement, but we finished the year off with more bull action. Will we see history repeat itself? We will have to see. But for right now, I am looking for buys. If I were to actually plan a trade on this chart with you right now, I personally would be looking to enter at the 1.26200. So we'll put that on there. My stop loss, going to follow the standard rules that I have for Forex currency pairs, especially ones like this. Put a 30 pip stop, so that would put us at the 1258. Go ahead and add that on. It is right beneath our zone. Now, targets to the upside, for how I would like to plan this trade, I would like my first target to be a minimum of a 2-to-1 risk to reward ratio. So we'll go ahead, we will go 60 pips to the upside from our entry just to see how that looks. And we're going to get into the intraday here in just a moment. Target 1, 60 pips. So let's go here into the hourly just to see how this is looking so far. Now, keep in mind that this area we were looking to buy, it is below this very large bullish candlestick. So what that could mean for how we could see price actually play out, let's come down to the 15-minute chart, and we could expect, if this scenario were to happen where price comes down, fills us on the buy, and then continues going to the upside, I would expect it to be a very rapid movement, down towards our whole zone. We may consolidate around this level for just a little bit, maybe make one lower low, and then I would be expecting price to do something like this for the rest of the week. Obviously I'm not looking for all of this to happen between market open and Tuesday, but just to give you an idea of what I would be looking for when we're considering all of the levels in between here. Our first target, the second target, be looking right around the 127.5. And let's calculate how many pips that is real quick from our entry to the target. It's about 130 pips. And if we did want to put a third target on, I would expect us to go, right up around where I was drawing this trend line to. Let's say, just for the sake of keeping things simple, 129.2. That would be 300 pips away from the entry on a 30 pip stop. That is a 10-to-1 risk to reward ratio. However, this is a trade that potentially could draw out right until the end of the year, depending on how price decides to play. And when I say that, we just have to consider what we had talked about on the dollar index, the historical side of things, and also how it could be time for the cycle to shift. We can notice that we did get a little bit of a indecisive candle, as some people would reference here, for the close on November 10th. And it's Remembrance Day this weekend as well. So, something to just kind of consider, keep in the back of your mind. But USD CAD, I am bullish on this. The last thing that we're going to look at, let's take a look at the AUDUSD, simply because we do have that unemployment rate news happening a little bit later on Wednesday next week. And right now, this is looking bearish to me. This is looking as if price would like to dip towards these lower levels, anywhere between the 7,500 major quarter and, let's say, the 755. Let's just extend that out so that it's easy to see. And while this may be a 50 pip zone, the way that the AUDUSD has been trading recently, with all of this consolidation happening, it does lead me to believe that this unemployment news is going to be one of two things. We're either going to continue to see price do this, and we can come and look on the intraday and just see exactly what's been happening. We may see price continue to range for the next couple of days. When the new week starts, we could see price do something like this, where in anticipation of a positive release, we push up to around the 7,200 level, and then we just kind of consolidate again, perhaps do a double tap up to the high right at that area of supply, and then for the actual news release, we could see price go something like that, where we go lower towards the target area that we were talking about. If I were to just draw this on here for you, we can see how exactly it would look. We can even do something, take this one step further and just expand this out. And we can do the same thing for the lower level. And see how that looks when we come back to the daily. Now, those are very small zones in the grand scheme of things. The upper one, it is slightly above our 200 EMA, so it could make sense for it to do exactly that. New week begins, stop hunt to the high, as some may like to call it. For me, I would be looking at this as the optimal entry, and we'll plan a trade on this as well. I would be looking to sell around the 7715. For my stop loss, I would be thinking realistically we would need no more than 30 pips. So we'll go ahead, we will add that on as well. 30 pip stop right in there. And even if we were to just identify one simple target, it would be down at the lower level down here. So on something like this, one simple target, we have a 30 pip stop, we have a potential 160 pip reward. And remember, this is all speculative. Price could do a lot between when market opens, from gaps or simply just more consolidation. to the actual the news release itself. Depending on how things have played out, you know, if we see something similar to this forming leading up to the news, I will be looking to release a update video focusing specifically on the AUD pairs. We'll look at the AUDUSD, perhaps the Euro AUD, and you know, maybe take a suggestion or two for other currencies related to the Australian dollar that we could look at. And if we get enough interest, then, you know, we could perhaps even do a live stream. So keep your eyes open for all of the upcoming releases that we do have. We're striving to provide you as much value as possible. And for those traders who are completely new, you know, make sure that you're getting plugged into the resources available to you. You can connect with me at zacharyhogan.online. The link is just right there for you on the screen, and it will also be attached to this video in the caption, the description. We're going to make this as simple as possible for you. So I thank you for your time, and hopefully you got some value from this week's outlook. Just to do one final recap, the dollar as a whole, we are looking for some bullish action. The US dollar, Japanese yen, we're looking for that same bullish movement. The Euro USD, because of the daily head and shoulders pattern that we did see printed, we are going to be considering some more bearish movement to come. US dollar Canadian, looking for some more bullish action, and of course with the AUDUSD that you see on the screen, in the grand scheme of things, towards the middle of next week, we're looking for that bearish movement to occur.